traders, Raghee here, and tonight's TradeForexFutures.com free video. We're going to talk about the dollar and some of the dollar positions that we have in the market right now. So first look at the dollar. We're actually sandwiched between 80 and 80.50. I've been talking a lot about the dollar. We had that great series of call options that we took off that 79.36.7. 79. 36.5 and then 79.37.5 floor in front of Yellen last week. We rallied to 80.50. That was a ceiling that I was very concerned about, so we liquidated those options. Great timing on that exit, and now we're just seeing the kind of chop and slop between 80 and 80.50 as the market really starts to digest two things. One, next week we have non-farm payroll, and the market really is now hesitantly determining whether or not they really are going to take what was probably a misstep by Janet Yellen in her inadvertent hawkishness, and the realization that rallying the market above 80.50 without a good non-farm payroll is probably fairly foolish. And there's your cap. You know, the realistic, basically the realistic scenario that Yellen did not mean to give everybody an October plus 6-month timetable, and that without some decent data to follow that up, they're not going to have a leg to stand on for that kind of pace. So here we are in front of non-farm payroll, basically about a week in front of non-farm payroll, stalled at just below 80.50. So what does that do? Well, that puts our U.S. dollar in a range, and that's okay as long as you're focusing on a base currency, in this case, say the Kiwi or the pound. We'll talk about the euro as well. As long as you're focusing on a base currency story that can capitalize on just kind of a range-bound U.S. dollar, and I just want to move this chart off the hard right edge here, or this price action off the hard right edge here, and as long as you can remember that base currency is going to be responsible ultimately for moving the market higher in this case. So I want to take advantage of a kind of flat U.S. dollar and then strength in the Kiwi. I love the Kiwi strength story. It's one of the best strength stories we have. In fact, the Kiwi and the Aussie are two more or less central bank-led currency strength stories. We have a much more neutral RBA, which is an upshift from where it was, and we have absolutely a more hawkish RBNZ, and that's giving our Aussie and Kiwi a lot of support. We kind of had a rogue Canadian dollar today. I'm not really convinced the Canadian dollar did much more than participate in an overall calm down rally, but Aussie and Kiwi are the real deal when it comes to strength stories. So if I have a flat greenback but a strong Kiwi, there's the follow through. And we actually had a 240-minute distribution fade that we triggered, and we're seeing really nice follow through on that because, one, we were able to gauge that the U.S. dollar was likely to remain subdued, which is great. I don't need the dollar to weaken here. I just need it to remain in place and let the Kiwi just run right past it. The pound versus U.S. is the same story. I'm not going to have to rely on the U.S. dollar to weaken. All I need is just that range-bound U.S. dollar and let the data, we had 3 big data points. The UK retail sales helped us out a lot, and I just need to let that U.S. dollar stand still and watch that pound sterling run right by it. Not the same kind of quality trend, but this was actually a channel up pattern distribution fade. In other words, we had support from the channel up, faded the 165 handle, and here we are about 110 pips above that entry. So really nice follow through coming into our non-negotiable 66.40 profit target. So we're locking in about 135 pips here. Really nice trade to the upside. So those are the two trades that are working. Let's talk about this last one, which is the Euro-US. The Euro is actually weaker than the US dollar movement would suggest it should be, which means that the dollar strength is not any kind of Euro weakness driver. In fact, we're really not even seeing that much dollar strength. So why the weakness here? This is really Euro driven. So this Euro has transitioned out of what was a fairly fresh 12 to 2 o'clock uptrend, and it's actually triggering right now a 37.38 to about 37.50 fade. This is no longer a market that we were looking for organized bullishness, but rather now respecting the fact that the Euro still, I mean, let's look at it. It has not been pretty, but this market's been climbing since last July. I'm not saying that we couldn't break down. I'm not saying that we couldn't increase the kind of chop that we're in, but we are right now taking advantage of chop. So I'll be talking a lot more about how to manage this position and take advantage of the Euro US, continue to look for opportunities to take advantage of the Kiwi versus US, and ultimately, on the heels of the current account release tomorrow out of the UK, whether or not this British pound could really emerge as a nice strength story for us. And if we can see follow through here and also on the pound loonie entry that we have as well. All right, that's tonight's free video. Premium members, we've got a breakdown of the loonie story and the US dollar, the COMDOL story, and I talk a lot about how a lot of the market got it completely wrong and why this is so important on that loonie crude oil tie, that correlation, and why that could be very dangerous if traders don't understand why that analysis that was so popular running through the markets today was completely off base. So I'll see you in the premium video.